Hey. Happy Monday, everybody. Happy Money Motivational Monday. And happy Martin Luther King Day. Hope and pray that everyone had a wonderful day off. If you were off for the Martin Luther King Day holiday, or if you were not off, I just hope and pray that you had spent a little time celebrating Dr. King's birthday and the national holiday and the service, or you might have spent some time giving back to the community, giving back to your local community, and just serve. You know, they say that Martin Luther King Day is a good day to serve. Of course, we need to be serving every day, all day. And I know you want to do that, but Martin Luther King Day is a day set aside specifically for service unto him and for all that he done for us in his day, you know, back in the day of civil rights and all that. I know I made a post today about as I reflect on Dr. King and his message and service, I just reflect on what he fought for. He fought for equal education, you know, for everybody, you know, equal rights, equal voting. He fought for equal pay. And since, you know, my business is money and finances, it really touched me when I think about the type of pay that we get if you work in the corporate world, or if you own your own business. We should make sure we implement or have knowledge about our pay to make sure that we are getting paid what we're worth. Okay. So listen, as y'all come in, y'all go ahead and say hey to me. Hey, Sandra, thank you for jumping on. And I'll try to speak to you all as you come in. And also, as you come in, go ahead and share the video. If y'all are live on Facebook, share the video out to your family and your friends. Hey, Miss Lolita, thank you for jumping on, honey. And thank you, Miss Margaret, for jumping on. Hey, girl, hey. So share the video out. Let everybody know that Lisa Stringer Bailey is on the book. And I am here to give you some Monday Money Motivation, as well as tonight is my monthly Money Management Matters, the podcast. Okay, yay. So as I am doing this podcast, I am also broadcasting on the YouTube. So listen, honeys, if y'all have not went over to YouTube and subscribe to my channel, please do that as well, because honey, we trying to build up that YouTube channel over at Money Management Matters. And because I'm going to be over there broadcasting extra double time for the year of 2022. And it looked like my internet service may be going in and out. So y'all excuse that. Hopefully we can just plug right in right along until we get this done. So for my podcast, what I'm doing on the Money Management Matters podcast is bringing on other financial experts, okay, in the money field, to give you all maybe a second person, a second opinion, a second perspective on your money and the different aspects of your money. So we all know that finances and money it's a lot of different aspects, a lot of areas that we can talk about with our finances. So tonight I thought, since it is January and beginning of a new year, that I would bring in a tax expert, because y'all know Uncle Sam be trying to get his little piece, his little percentage, you know, because they always say, what is it they say? It's two things you can depend on is death and taxes, okay? Because we're going to have to pay some taxes. But little do we know, if we don't get the knowledge and the understanding, that a lot of times taxes can be less, you know, than what we normally would pay, if we know the information, if we know the inside scoop, okay, the nuggets. So tonight I have for you all a very special guest. She is super, super, super smart in the tax arena. And I'm going to give y'all a quick introduction of this young lady. Her name is Kiana Wright Colson, and she is the owner of Right Way Tax Services, which is located in Oak, Illinois. Okay, so she's up there in the cold country where that snow and stuff is. We got a little taste of that down here in Georgia, but that's okay. It's all good. I'm at the house warm, so we good to go. So she is also, she has a bachelor's degree with a concentration in accounting. Okay, so she's an MBA, very smart cookie. She has over 16 years, 16 now, that's a long time, of experience in taxes, finance, and accounting. Honey, she's a girl after my own heart because my degree is also in accounting, but she has taken the tax route of accounting, and she is also a member of the Illinois Certified Public Accountant and the American Institution of Certified Public Accountants. Okay. She's a smart cookie. Because let me tell y'all, I took that certified public accountant test like 2, maybe 3 times, failed all 3. So I was like, no, this ain't for me. So, but she did it and she got it, and she is a CPA. So I am so excited to speak with her and have her on. And she specializes in small business setup, taxes, and tax planning services. Okay. So this young lady is all about the taxes, honey. She's going to help us get our taxes right. Now, this chat is blowing up. Hey, Gwen, girl, thank you for jumping on. Hey, girl, hey. Tara done jumped in. Hey, babe. Hey, girl, hey. And Dominique is in the house, the bomb marketing queen. Hey, girl, hey. So let's go on and get Miss Kiana on in here. Y'all give her a round of applause in that chat. Let her know that you are happy she is here. Let me switch this out real quick. Hey, hey, hey. There we go. So can you hear us, Kiana? Let us know you can hear us.
I can hear you. Can you hear me?
I can hear you. I can hear you. Everybody in the chat, give us a thumbs up. Let us know that you can hear us. Everybody saying, hey, Kiana.
Hey, y'all.
Hey,
I see y'all,
Kiana.
Miss Margaret, Gwen, Dominique, Lowe. Hey, Miss Tara. Who else is on here? Yeah,
all
Gwen.
right.
I think I said everybody.
All right, Miss Dominique said we is the amazing bomb, the dynamic duo. Kiana is the bomb, honey, at this tax game. So listen, before we get started, I'm gonna let Miss Kiana go ahead and introduce herself again. If I miss anything in the bio, just let us know, girl. You go right ahead, and then we'll jump into some questions.
Okay. So like Miss Lisa said, I do own and operate Right Way Tax Services here in Illinois. I do service all 50 states. So no matter where you reside, what your tax issue is, I can definitely handle it. She did get that right. I've been in tax and accounting for over 16 years. I started out working for one of your big box tax preparation corporations. I've worked and still working in finance and accounting for several law firms. So finances and numbers is my game. I love taxes and I love to help people save money when it comes to tax time. So yeah, it's my passion.
All right, girl. That's what I'm talking about. Somebody that's smart and passionate about their business. So you want somebody that's in there for you for the passion. Okay, honey. Well, let's get on into these questions. I know everybody want to know a couple of things about the tax season coming up. I know it's got to be a little bit more complicated because of some of the things that have happened over the past 2 years. The whole check extra money we've been getting, the child tax credit, all that kind of stuff. So let's see. The first question I have for you is how do you help businesses save more money on their taxes? Because we all about saving money, honey. We ain't trying to pay no tax.
So, my first step is to actually, and this goes for any business owner, no matter what your entity structure or type is to find out what their expenses are, what type of business they're running, because all businesses have similar expenses, but then there's a whole bunch of expenses that are completely different. So, my first question to small business owners is, how are you keeping track of your expenses? Are you maximizing those expenses, right? Because we want to maximize our expenses. We spend a lot of money to invest in our businesses, so we want to make sure that we are writing off those expenses, but we are doing it strategically in a way to where we can reduce our tax bill at the end of the year.
I know that's right, girl. So you saying to make sure that everything that we doing in our business, if we are spending $1 and over at the office, and this I do this a lot. I go to the Office Max and I might make maybe 10 copies of something if my print ain't working here at home, which it ain't. So I've been over the Office Max and it was like, I don't know, $10. Do I need to keep that receipt?
Absolutely. So the IRS rule of thumb is that you do not have to maintain records or receipts for expenses less than $50. My rule of thumb is save it all, right? Because you could be going to Office Max every day. You could be going to Office Max, so many times a week. So those expenses tend to add up. You also could be paying for, parking. So in certain places here in Chicago, we have to pay metered parking. Now, my metered parking may cost me $2, but if I'm going to this office space and I'm paying $2 a day, those are the receipts that I need to keep, because like I tell people, it may seem minimal now, but you will not believe that by the time December comes, how much you've actually spent on parking, how much you've actually spent on photocopies, how much you've actually spent on entertaining clients. And that just means, even if I buy a case of water, to have in the office for clients to come in, it adds up. So you need to, I tell all of my clients to keep every expense and let me decide, if this is something that we need to keep track of or not.
Absolutely, honey. And they said over in this chat that, yeah, that's right. Save all, because it all adds up. Okay, Absolutely. So that's good advice, because a lot of people think that, like you were saying, they was thinking about that under $50, they might not can qualify, but definitely it could.
Absolutely.
So let me ask you this question. I hear a lot about businesses, and if they happen to have to owe taxes, it could be because they've missed some deductions that they could have taken. So in your experience, what are some of the deductions that a business can take but sometimes miss on their taxes?
So a lot of time I find that business owners do not take advantage of making charitable donations. So just like on your personal tax return, you can, as a business, make charitable donations to an entity or organization, as long as they are registered with IRS as a non-for-profit organization and they provide you with a letter of contribution or donation. You're absolutely well within your rights to claim that expense on your tax return. Another thing is startup costs. So I get a lot of questions like, oh, I started my business this year. I didn't make any money. So, do I file my business on my taxes? And the answer is twofold. It depends on how much you actually spent to get this business off the ground. And I always tell people that startup costs, you can actually claim years down the road. So you don't have to claim the startup costs in the actual year that you started the business. But at the point that you claim the startup costs later on down the road, you run the risk of shielding yourself to only claiming $5,000, because IRS only allows $5,000 deduction for startup costs. So you always want to claim the expenses in the year that they are actually incurred, So that way you can spread your startup costs over the first 3 years of business. And the IRS knows that it's hard to get, start a business. So the first 3 years of business, they are not expecting you to report a profit. It takes money to make money. So charitable contributions, startup costs, retirement plans. So I think a lot of small business owners do not take advantage of creating retirement plans within your business. And even if you are working a W-2 job, you can still take advantage of a retirement plan. There's ways to do so, so that you can still take that deduction on your tax return as a business owner. Interest on credit cards, bank accounts, those fees that you have to pay for monthly maintenance. Not seeing people write those things off. Credit card monthly maintenance fees. If your bank fines you or penalizes you for failure to have a minimum balance in your account, you can write those fees off as well. Chargebacks, right? So we've all had, well, I can't say that I have, but I know that a lot of people who sell products have had instances to where they had chargebacks. People had to return items, or people just downright dirty and said, hey, I didn't receive my product from this person and I need my money back. So that's also something that you can write off. Chargebacks are considered bad debt expenses. So those are totally expenses that we can write off as small business owners who sell products and even a service. So, it depends on how your services is set up, maybe an ebook, a consultation or whatever. If there's a chargeback involved, you can definitely write that off. And then two other important things is education and training, and then health insurance. You as a small business owner can purchase your own health insurance policies. Those are completely tax deductible, but you have to be smart about it. So everything is strategic. The IRS is not the master of all. They can't whip you and tell you that, these expenses don't fit your company. So the name of the game is to make sure that the rule of thumb is always to make sure that the expenses are reasonable for the industry that you are working and operating in. So as long as they're reasonable for what you have going on, then you can write off pretty much any and everything.
Wow. Girl, you gave us a whole list of gems, honey. I'm down here scratching them all down.
I'm here to help the people. We gotta maximize. We have to do what big businesses do. That's what we have to be out here like that.
Girl, that's what I'm talking about. That knowledge we got to know, because a lot of this stuff I didn't even know, and I'm a business owner. I got a question. Now listen, y'all, in this chat, if y'all got some questions for Miss Kiana, y'all go ahead and drop them in the chat, honey, so we can get those answered for you. But you had said credit card fees. Now, the credit card, is that your business credit card or your personal credit card that you can write off?
Absolutely. So it must be your business credit card. Remember, we should not be commingling funds whatsoever. So you should not be using your personal account for business, and you should not be using your business account as your personal piggy bank. There's ways to make sure that you can provide money to yourself via your business. So anything that is business related, credit card, bank accounts, even store charge cards, even those cards when you guys are building business credit, if you are being charged interest on those accounts as well, all of that interest is 100% tax deductible.
Wow, that is amazing. That is amazing. Thank you, honey, for those gems. Let me just tell you. So let me see what else I got for you over here. I got some more questions. So listen, what advice can you give a business owner to not have to owe taxes? I think you went through a few with some of these deductions. So let me know if I'm correct. We need to have as many deductions as we can to lower our tax. Is that correct?
Yes and no. So it depends on business structure. It's totally tax strategy, right? So you have to decide what you have going on for that year. But I always tell people, expenses is where you're going to maximize your deductions, and making sure that you are taking more of the larger deductions that's actually going to reduce your tax liability than having to, scrape all of those $1 receipts together, right? Because there's only going to be so many $1 receipts that you're going to be able to write off those expenses. And then the other thing is to invest in your business. We want to take advantage of depreciation. So, and depreciation is on equipment, property, and plant. So when we say plant specifically, we mean land. Not land. Buildings and stuff like that. So if you purchase a printer and it's a multifunctional, laser printer, and you've paid $400 or $500 for this printer, that's a depreciable asset, right? If you are into real estate and you purchase a building and you're using this building to generate revenue, as a way to earn more money on the side, so that is also a depreciable asset. Vehicles, if you purchase vehicles in your business because you need to travel back and forth, you're transporting people or product, you're a party planner and you're actually using your car to go to these events, another depreciable asset. So we have to get in the mindset of investing in assets that are depreciable, making sure that we double down on the depreciation, because let me tell you something. There's two types of depreciation. There's book depreciation, and then there's tax depreciation. Tax depreciation provides you the larger deduction. Book depreciation just makes your books look a little bit cleaner so that you can depreciate the asset a little longer over its useful life. IRS, now up until 2023, will allow you to take what is called bonus depreciation, where you can write off 100% of the cost of that depreciable asset in the year that it was purchased. Now, no, if you take that write-off up front, you can't spread the depreciation over its useful life, but it's an option, right? We have truck drivers who purchase trucks and they may want to see that money come back right away. So they would, take advantage of bonus depreciation. So when I talk about like helping small business owners reduce their tax bill, one, we look at your expenses. And then two, we look at what items should you be depreciating and how can we and if you're not depreciating them, then we need to set a plan in place so that you can start depreciating those assets on your tax return.
Girl, that's some good stuff right there. That is some good stuff. Because I know about depreciation, but I didn't know which items, which equipment. Can you depreciate something like a laptop or your computer?
Absolutely. Laptops, tablets, cell phones. Nice. If you have to purchase, so I have an extended screen on my laptop. It didn't cost that much, but it's an asset, because I need it to do business. So things like that you need. If you have to have portable printers and fax machines, which I have a portable printer, that's a depreciable asset. I use my vehicle when I go to the office. All of that stuff is depreciable. If you have machines and tools like Gwen, she makes shirts, right? So her machine that she purchases to create those shirts is a depreciable asset, all the way down to an iron if that's what she needs to apply heat to get those beautiful designs on those shirts. So just think about depreciating assets as any equipment that's a big ticket expense that you use in your business for everyday transactions, service, to produce whatever product you have to make. Those are considered depreciating assets because you invest heavily in them. And then that's not something that you're going to transpose of within 30 days.
Wow. I love it, girl. You is dropping the gems, honey. You is dropping the gem. Let me go on up here and throw how Margaret said, girl, thank you for dropping these gems. She is doing the thing, honey. I told y'all at the beginning, this girl is smart. Here, she is so smart. So let me go on over and let me see what else I got for you on for these questions. Here's the question. So, is it advisable to have a tax accountant throughout the year or just at tax time? If so, if not, why?
I will say this. I strongly, I'm all for having a tax accountant. I do realize that in the startup phases, you probably cannot afford one. So, I strongly suggest that you have one as you start to scale your business into, that 6-figure range, or once you hit the higher figure range, because you need somebody to help you manage these expenses. You need somebody that's going to help you strategize what you need to do. Sometimes we can miscategorize things. We put things as supplies that's not supplies. We put things as expenses that's not necessarily an expense. It could just be, accounts payable. It can be, a lease agreement or something. So you want to make sure that you are putting things in the buckets that they need to be put in. And then the tax accountant should go further and say, hey, here are the financial reports for your business. This is what you should be looking at to determine how profitable your business is within that year or within that quarter, and what you need to do to either scale back on expenses. Because, honey, look, let me tell you something. When I first opened this business, I spent so much money on Amazon. I'm talking about every tax book, Barbara Weltman printed, child. I purchased every book that lady had. And I realized that I spent so much money on training and educational stuff. I was like, okay, so we're not going to do this next year, So you need somebody to help you put that budget in place and force you to stick to it, because the whole purpose of being in business is to generate revenue and make a profit, not so that we can keep writing off expenses, because that's not the name of the game.
Girl, how about it? How about it? So look, I would say, just me, like you said, everybody can't afford it at first, but definitely put it in your business plan for
Absolutely.
a future expense, because you're gonna need it. Like Kiana said, as you scale up, you're gonna need someone to partner with you on your money, which is I partner with people for their personal finances. But if you're running a business, honey, y'all small business owners, y'all need a tax accountant. Okay, I'm just saying.
So you already know, right? Just dealing with people with personal finance, you already know we need some help.
So. Yeah. Gots to have it. So let me ask you this real quick. If we cannot have a tax accountant, what software do you suggest we use just for on our own if we're trying to DIY it?
Okay, so there is an excellent super bomb. They ain't paying me to say this, but I love them. It's called Wave Apps. So it's WAVEAPPS. They're fantastic for startup business owners. You don't have to train it as much as QuickBooks, and don't get me wrong, everybody is pro QuickBooks, and I'm not anti QuickBooks. I just realized that through my conversation and evaluating a lot of small businesses who are starting up that jump straight into QuickBooks, there's so much missing. And then because there's so much missing, I have to charge more because there's so much more for me to clean up. So Wave Apps is totally perfect for beginners, because once you train the system to learn how your company's expenses and what the company expenses are, it will automatically, pick up those things, so that, you may have to teach it or train it for the first 2 or 3 months. And then after a while, the system knows how your company moves. So you won't have to keep going in there to recategorize things. You may need assistance as far as like setting up the chart of accounts, numbering the chart of accounts, that stuff, which is fine. But for startup businesses, I strongly suggest that you use Wave Apps. It's awesome. They have an app you can download on your phone. You can scan your receipts right there from your phone, and it's locked into the system. So if you lose that receipt for whatever reason, you can always go back into Wave Apps to recover it. So I love Wave App.
Okay, so I'm gonna put that in the chat. So that's waveapp.com, I'm assuming.
Yes, ma'am. Wave App. So Wave. Yep.
Wave App. So all y'all small business owners out there that don't have a tax accountant, but now you do because Kiana's here to help you. Just reach out to her. I put her information on the screen. But if you need something just for yourself or your business, we all should have some type of accounting system anyway. So Wave app is one. I know QuickBooks is the most popular one that we hear out
Absolutely.
there, but there's others. And like, I'm glad she shared this Wave app. I don't know about the fees or what all, but it could
So
be
Wave
a
apps
good.
is completely free.
Oh,
So
really? Okay, you
and
know
you so
now
the
it's
it's
free.
100% free. So that's why it's perfect for
Wow.
startup businesses.
Okay.
You can actually run payroll through Wave apps. I think they charge you like an extra
What?
$32 for it, but that's not bad, right? Because QuickBooks
That ain't bad.
is, yeah,
Oh, it's
QuickBooks
over a
charges
hundred
their
dollars.
fee. And then if you
Yeah.
want payroll, they charge you extra. But with Wave apps, you
Yeah.
can completely get everything that you need as a startup business owner. And
Oh,
then, like
that's
I
good.
said, and the other thing I love about this software, the Autobot is so smart. It's like you can ask a question and it's just populating the answers. Boom, boom, boom. Click here, touch this, enter that. So definitely check it out if you
Nice.
cannot afford.
Oh,
Right now, you cannot
honey.
afford to utilize a tax accountant.
Girl, look at here. I'm all about the saving of the money. I'm using QuickBooks right now, and it's taking a nice little chunk out of my little budget. But I will
Switch
be
over.
checking out Wave app, honey, because
Yes.
I don't mind switching over. So, because I'm all about saving more money over here at
I
Money
know that's
Management
right.
Matters. Y'all didn't know yet. Girl, I am loving this. Look here. Y'all over here in this chat, if y'all got any questions, honey, y'all better drop them questions real quick because we got about 10 more minutes on here to get this knowledge from Miss Kiana, honey. Let me see what other questions I have for you. So, I think we already explained the importance of maintaining our business records and our receipts. So, you say, to keep every receipt. So we went over that. Is there anything else as far as running a business that your tax accountant would need to have that you see that sometimes a lot of small businesses don't have?
Yes. So financial statements. I don't care how big or how small your business is. I don't care if you make $10, $10,000, $2, $2 million. You need to have financial statements. Financial statements are your business's financial report card. How do you know what your goals are for the next year, for the next quarter, if you are not monitoring those financial statements? You cannot set budgets for yourself if you do not know what's on the income statement, what's on the balance sheet. How do you know to reduce certain costs? You can overspend quarter one, you can overspend quarter two. So your financial statements, which is your profit and loss statement, your income statement, and your balance sheet, you need all of those financial reporting tools so that you can make better financial judgment for your business. And then, so let's just say your business blow up and it's so big and you decide to sell it. The person who is willing to purchase your business, they're going to want to see your financial statements. So it's not good enough for you to say, I don't have financial statements. Everybody should have financial statements, whether it's a one pager, a half a page of a statement. You should know what your company's financial position is, not only just for tax preparation purposes, not only for budgeting purposes internally, but it also helps you to better gauge pricing, right? So you need to know what pricing is within your industry. It helps you to look at your competitors, right? So you need these financial statements so that you can say, hey, I'm selling cups too, but Susie's selling cups, and Susie, she's selling 1,000 cups a month. And what is she doing that I'm not doing? So those financial tools are very important. Your tax accountant should basically be honing in on the financial statements. The expense categorization is a huge part of it, but the financial statements are the most important part because, like I said, it's your company's financial report card. And you want to bring home C's and D's and, thinking somebody gonna reward you? No. So we want a good financial report card.
Absolutely, girl. I am loving it. So let me ask you this: these financial statements, this is something that can be generated from an accounting system, which we just talked about, the QuickBooks or the Wave apps. But is this something that you could give support to your clients? And how much more support do you give your clients? Like, for instance, do you support them if they happen to have to get audited? Do you support them on a quarterly basis? And do you help prep, these financial statements that's needed?
Yeah. So the profit and loss statement, income statement, profit and loss, income statement, and balance sheet. Those reports are generated mostly through your accounting software. What I do as a tax accountant is make sure that the things that are in your accounting software are in position to be put on those statements. So depending on how things are labeled and categorized, it may not get to the correct statement. Your income statement and balance sheet could look so off balance to where it doesn't make sense, right? So my job as a tax accountant is to make it make sense. So my clients that do sign on for me with me for monthly services, I do take care of all their financial statements. I help to make sure that they are maintaining their renewals, right? So a lot of business owners don't know that you have to pay annual fees. That LLC is just not a one-time thing. You have to pay that fee every year to make sure that your business is in compliance with your state. And failure to do so could cost you more than what the startup cost was to get the business off the ground with the state. So other things I do for my clients is the accounting softwares don't necessarily provide an accurate depreciation schedule. So I manually create these depreciation schedules in Excel. And yes, I said manually because that's how I was taught to do it. And that's the way I know how to do it. So that depreciation schedule is also very important, especially when you have larger assets that need to be depreciated over time versus taking the bonus depreciation all up front. If my clients get letters from the IRS throughout the tax year, yes, I do help them with the IRS audits, IRS letters. And even if they're not my client, if it's somebody that comes to me because another tax professional or, just because they did them themselves and something wasn't correct, I do help with audit assistance as well. So, yeah. Yep.
Oh, that's wonderful, girl. Sound like you can just go to Right Way Tax Services and get all your tax.
That's right, full service. We are full service,
girl. Full service. I love it, honey. I love me a one-stop shop, honey. Now, look, I think we had a question in the comments here, Tara. I'm not sure if you meant to say, should you use the same person to do your personal taxes and your business taxes? Question mark. Yeah, that's a question.
Okay, I will say this. The person who does your business taxes should be able to do your personal taxes. Not everybody who knows how to do personal taxes can do business taxes. So you need to keep that in mind. A lot of people who are new to entrepreneurship, new to becoming businesses, and thinking that they can just keep going to their regular tax professional to do business taxes and thinking that the things are going to turn out right is not necessarily always accurate. Again, you want to make sure that you're doing your due diligence and asking questions. One of the most important things you can do to find out if your personal tax preparer can do business taxes is to ask questions. Ask them, what forms do I need to fill out as a business owner? They should be asking you questions, rebuttal questions. What I tell people, when you look for a tax professional, you should interview them as well as them interviewing you. So you want to make sure that they're asking you, hey, what's your entity type? What is your structure? How long have you been in business? They should be requesting your EIN letter. I always tell new clients, I cannot tell you what forms you need to fill out until I see that EIN letter. So that's one major important document that you need to keep in your corporate folder and file at all time. I can't service you the best way I know how until I see that EIN letter. I can't tell you how many times I've gotten EIN letters from people and they think that they're filling out a form Schedule C, and they've already, I just put my daughter on here because I want her to be in the business. Well, at the point that you do that, you have a partnership. You're no longer a sole proprietorship, Oh, I just put my husband on here, or I just put my mother on here, or me and my friend, so you have to ask questions, interview the tax professional, and they should be asking you questions as well. It shouldn't be like, oh, I know how to do business taxes. Well, you don't know what type of business I have. So, that should be the first question.
Oh, no. Okay. Hey, Miss Keita, thanks for jumping on, girl. That was a good question, Tyra, because, we need to definitely make sure that that person that's doing your taxes, whether personal or business, know what they're doing. We got to ask questions. I hope y'all jotted down all them questions that Kiana just threw out there, honey. And if you didn't, go back and catch the replay, because, honey, she dropped some gem questions right there that you need to be asking your tax professional, because that stuff, like, I ain't even work. I do my own taxes. So, I ain't really thought about that. But you know what? As my business grows, I'm definitely going to be hiring someone outside to do it, because I'm going to have more deductions and I need to make sure I get more of my money back. Right.
Absolutely.
So, let me see. Does anybody else have any questions over here in this chat? Let me see. Miss Keita said, I need her at the event. Girl, I wish she could fly in, but Miss Kiana lives in Chicago, Illinois, honey.
Where are you guys at?
In Georgia. Keita is in Georgia.
Oh, okay.
We in Georgia, girl. Yes. So but look, Miss Kiana been dropping whole lots of gems. So I don't see any more questions, but let me see. One other question that I have for you is, and we didn't talk about this, and it just slipped my mind because I just thought about something I was going to ask you. But so for this tax season coming up, I know I've been looking at a lot of your Facebook Lives. Y'all need to follow Miss Kiana. Is it right, Coulson?
It's right.
Right, Coulson. Right. Follow her on Facebook, honey, because she be doing some Facebook Lives, dropping all these types of gems all the time. So she's been talking a lot about the child tax credit monies that we've been getting in. So how is that going to affect some of our parents that's also business owners?
So what people, so here's the thing, right? I am not a fan of all of this social media, fake news that's going around. It actually like ruffles my feathers to the point to where I have to jump on live, no makeup, and just like give y'all the truth, because
bring the truth.
I like to be honest, and I don't want you playing in the clouds, because I don't play in the clouds. So let me paint a realistic picture for you. So if you are a small business owner, and you are not paying quarterly taxes, because that's one thing I strongly, so that's another tax savings thing you can do, because as small business owners, depending on what your entity structure is, you're going to pay 15.3% off top of whatever your revenue is for the year. So just imagine you had an awesome year, right? You've made $70,000, $80,000, I don't care if you've made $40,000, you will be responsible for 15.3% before deductions. Okay. Now, what people don't understand is there's two tax credits do two things. They reduce tax liability, or they increase tax refunds, or make it so that you can get a refund. So if you are a small business owner, you have not paid quarterly taxes throughout the year, you have made a good amount of money, we're going to say, roughly $40,000 to $50,000, and you have not paid quarterly taxes, but you opted to receive those advanced child tax credit payments, between July and December. So if you do not have enough tax deductions, if you don't have a tax planning strategy in place, your tax liability will eat away at those credits. So all of these little memes and posts that you see with people getting $14,000 and $15,000, I've even seen $35,000, refunds. That's not realistic. because
Mhm.
the IRS is going to get paid first. So if you don't pay your business taxes and you are filing a form Schedule C, then the IRS is going to pull away from those child tax credits. They're going to pull away from your earned income credit. They're going to pull away from advanced child tax credit. They're going to pull away from dependent child care credit. So your forms will actually say, hey, you were eligible for 4,000, but because you didn't pay business taxes, you owe us 4,000. So guess what? You broke even, right? You don't get anything and you don't owe them anything. So I think that is the misconception. Like, people are not having that conversation. Like, real talk. People are not paying quarterly taxes because they don't want to, or they don't know that they should be doing it. So you're thinking that, hey, they told me I'm going to get the rest of that child tax credit payment when I file my taxes. And you got it, boo, but you owe him too. So now he going to take what he need from you. And if you don't have nothing left to in a form of a refund, then you don't get a refund. So I think that's what small business owners need to understand. Like, you are fully eligible for the credits. You'll see the credits appear on the forms that they populate on. But when your final tax return numbers are produced, you're either going to owe, or it's going to, your refund is not going to be as high as you anticipate it to be. So I just want people to, like, not necessarily blame the tax professional, but this is the year to read your documents, look at your paperwork, ask questions. The tax professional should be able to explain to you why you don't have the refund that you expected to have. If you're a small business owner, they need to say, hey, okay, well, we probably can get some money back. Let's take an overall look at your expenses, which is why that profit and loss statement is the most important document I tell small business owners you need to have. So yeah, it's not going to be, it's not going to be like the song say, it ain't going to be a whole lot of money in this, it ain't going to be a whole lot of money,
Girl, we done got, look, we done
ways.
got bamboozled. That's what we done got, bamboozled.
That's right.
Run amok, lied to,
that's right.
on, whatever y'all want to look. Do y'all
That's
see
right.
why I brought this young lady on? This girl is spitting all kind of truth. She's honest. She ain't blowing up our head thinking we gonna get all this money back. Look here. All I want y'all to do is contact Miss Kiana. Her contact information is on the screen. rightwaytax1040@gmail.com. Go ahead and email her with your questions or set up an appointment. There's her phone number on here. I got a question coming in. Let's see what Keita said. What if you made less than the following year?
Okay, so here's the thing with that, right? So look back credit is back. For those of you who do not know what look back credit is, it was used last year during the pandemic, during tax time. So basically the IRS, because so many people were on unemployment, they were looking back to a previous tax year, using that income, those numbers for earned income credit, and then allowing you to still claim earned income credit on your 2020 tax return, so that you would not owe, right? Because so many people were on unemployment. The look back credit is back, okay? And again, they're going to look back to 2019. So if you made less money the following year, in 2020, unfortunately, the look back credit does not go back to 2020. They're going to only look back to 2019. So that's how they would calculate your earned income credit. It's strictly going straight back to 2019, only because for 9 months out of this year, there were still so many people on unemployment. A lot of people still are not paying unemployment taxes. And so let me paint a picture for you, right? You run a business. You were receiving unemployment. You have children. You did not pay unemployment taxes. You did not pay taxes on your business. Do you get where I'm going here, right? But you got these 3 kids and somebody post told you that you're going to get $8,000 back. Well, guess what? You owe taxes on that unemployment, and you owe taxes on your business income. As of today, and I say as of today because things are constantly changing with IRS, but as of today, they are not forgiving that $10,200 on unemployment insurance. So if you did not pay taxes on your unemployment insurance, guess what? They're going to snatch that too. So you see how these refundable credits ain't looking that refundable. They not as refundable as people are painting the picture to be. So that's the other thing you have to take into consideration. There's so many variables, and I don't want people to think I'm being negative Nancy. Like I told y'all, I don't play in the clouds. I'm very realistic about your situation and what you have going on at the time. People come to me to help them strategize how to navigate around these issues, right? So we sit down, we come up with a plan on how to navigate around some of this tax liability, how to reduce the tax liability. That's my favorite thing to do, is reduce tax liability amongst the tax preparation. But we have to start, like I tell people, tax preparation is proactive. Tax planning is tax preparation is reactive. Tax planning is proactive. So we have to be more proactive. Okay, and not wait to tax time to sit down and have these conversations.
Absolutely, girl. Look, I talk about planning all the time. Planning for the future, honey. Planning for retirement. Planning your money out. It's the same way with your taxes, honey.
Yes.
You can't wait till January and February and try to figure this stuff out.
Exactly.
So y'all got all this information right now. If y'all ain't ready right now, whatever, y'all know for next year to be ready to get it right. So, honey, look, I don't know about y'all, but I have gotten so much information just in these 45 minutes that it is phenomenal. This girl knows her stuff. Y'all get in contact with her. Look here, Kiana, what is your Facebook page?
My Facebook page is Right Way Tax Services. Okay. So no underscore, just Right Way Tax Services.
Okay, so find her on Facebook, Right Way Tax Services, right?
Yes.
Okay, and then is that where you do all your broadcasting? Your Facebook
yeah, so
live?
I go live on in that group most of the time. Mostly all of the time I'm going live there. So I won't be going live tonight, but tomorrow I'll be going live. I am going over some FAQs for child independent for the child tax credit, only because there are some instances where we have people who are split custody, split, filing of the children for tax purposes. So we need to talk about what that looks like realistically, right? We need to talk about the conversation you need to have with the mother or father of that child, if this is not your year to claim that child. And then we're also going to talk about some things that's going on with S Corps, right? Because IRS hired over 700,000 new employees just to investigate S corporations. So
wow,
we have to get serious about our business. We have to get intentional with our purpose in our business, and we also have to we can't keep saying, oh, I didn't know, because as you know, they don't care that you didn't know. So they expect you to know when you're setting up your business. And the people who help you set up your business, they may not be tax professionals. They may not know what you need, what your compliance, so we talk about compliance a lot on my page. They may not know what your compliance is as far as IRS is concerned. So yeah, I got some good stuff planned for the rest of this month.
Okay, honey, y'all better get on over and like her business page. And it is Right Way
Tax Services.
Okay, I'm trying to in the chat.
Okay.
So, listen, that was some phenomenal information. I just want to thank you so much for taking some time out of your busy schedule, girl, because I know you're busy.
I have fun. I enjoy myself. I could talk taxes all day long. I tell people all the time, so yeah.
I love somebody that that's passionate about what they do, because that make it so much better, because this person is going to be genuine. You know what I'm saying?
Absolutely.
They're going to be honest with you, and that's what I love about you, your honesty. and your upfrontness, and you're just really trying to help us small business owners. And
Yes.
listen, I think the IRS is cutting back and have hired all these people because I've heard the last 2 years has been a boom of new businesses opening up, right? Starting up.
So
because
yeah,
of the
you know why they
2020.
opening up? Because
Yeah.
they went on the SBA website and lied and said they had a business, and then somebody scared them and said, "Oh, you
Girl.
better get your documents in order." So they
Yeah.
went to them state websites and form these businesses, child, and now
trying to
folks
get the
telling them,
PPP.
yes,
People
you got
going
this
straight to prison.
Absolutely. They got that PPP and they think they got to file business taxes. When I tell you it's a mess, it's a mess. But I hear me clearly. Come 2024, all of those businesses will be dissolved.
My God. If they ain't set up right?
Well, most of them only set up because they got the PPP. It wasn't no business to begin with. But child, don't get me started. Don't get me started, okay?
Don't get started on that tonight, girl. Okay, we're gonna go ahead and end right now. Listen, y'all. If y'all go over there and follow her page, like her page, and when she come live, honey, y'all go in there and give her some support and listen. She dropping gems all the time. I'm trying to tell y'all, I got a notebook that say Right Way Tax Services. So I can be catching all the information. I love it. I love it. I love it. Thank you so much. So listen, y'all, that is it for us tonight. I appreciate all my live watchers that came through and caught us live on this evening. And if I get any replay watchers, honey, y'all go ahead and hit me with that hashtag replay. Let me know you came through so I can say, hey, girl, hey, or hey, guy, hey. And thank y'all for stopping by and checking out the Money Management Matters, the podcast. Yes, indeed. So listen, y'all have a great rest of your evening. I pray that you have a blessed night's sleep. And listen, y'all stay warm out there. If y'all got any snow or any bad weather, I hope and pray that you all are staying warm and staying in out this cold weather. And thank you, Tara, for that nice compliment. I appreciate you all. Tara is one of my number one fans. Thank you, Nicole, that's tuning in from over there on the YouTube, honey. I appreciate you. If y'all not following my YouTube channel, y'all go on over there and subscribe to Money Management Matters over on the YouTube. And thank you so much for coming through, Miss Angie. Thank you so much. Good night, Miss Angie. I appreciate all your love and support. Y'all have a great night, and I will see y'all soon. Be back next Monday for my Monday money motivation for sure. And you never know, I might pop in, between now and then with some information. Oh, and don't forget, if you are interested in my first money workshop of the year, it's going down on Saturday evening at 6:00 in the evening. Check on my page for the link if you want to get the link. Is on. I'll be on Zoom. It's virtual, honey. So y'all can just come in and get the information. We are working on our money plans. Okay, we are planning ahead. Like Kiana just said, we have got to be more proactive with our money matters, y'all. We got to start making plans, making goals, setting goals. So we're going to be working in this workshop, setting some money goals for the next 30, 60, 90, 6 months out to the 12-month mark. And I'm going to be your accountability partner. We talked about it earlier tonight. Sometimes it takes partnering up to really understand our money and our finances. And it takes asking questions, okay? It takes being accountable, being committed, being disciplined. And that's where I come in. I'm going to help you get through all this your personal financial matters, and set some goals that's attainable so we can start having a financial foundation that's strong, okay? So when the next pandemic come through, we won't have to depend on the government for those checks and those tax credit and all that stuff that they be trying to give us. We ain't got to do all that because we're going to already have our own finances set up. We're going to be able to pull from our own money that we got saved. We're going to be able to have finances where we're starting our own business, okay? And we're making money in our business. We're going to have multiple streams of income. Listen, all this kind of stuff is what we're going to start doing, that I'm going to show you how to do it. And I just want everybody to come along with me and make it happen, okay? So check that out on my page, on my personal page and my business page, Money Management Matters. The links are there to register for the class. Okay, so that's all I got for you guys. Thank you all once again for joining on the podcast broadcast tonight. And until next time, see you later and God bless.